I'm at the Flame University in Pune, and this is a special week for Flame, given that some of the biggest investors come and do share their insights on investments, on strategies with the participants here. In fact, one of the legendary of the market is joining me, Manish Chokhani of Enam. He's wore a lot of hats, whether it's Enam, whether it's Axis, whether it's now TPG, and also he's a governing board of Flame. Manish, thank you very much for joining us from Flame.
Thanks for coming.
You've been involved with Flame for many years now. You come every year and enrich the participants in terms of the investment strategies. What makes Flame different and unique compared to other universities?
So at Flame, as you know, we are trying to create a very interdisciplinary approach to learning. So we want to create students who are, well versed in all the liberal arts, sciences, commerce, all of that in one place. Because life, as you know, doesn't come neatly packaged as a commerce problem or an arts problem or a technology problem. It is nice and gooey and messy, and everything has to be understood. And even when we invest, over our last 25, 30-year journey, what we learned is it's not enough to just know financial accounting or investing or just be a CA or a CFA to be a better investor. If you understand economic history, you understand psychology, you understand anthropology, you understand technology, all of that holistically makes you a better investor. And that's the environment we are trying to create here for the students. So students should be of that nature, interdisciplinary. The teaching over here is of that nature. We like to create people who will not only be job seekers, but also create jobs over here. And similarly, therefore, the people who come and talk here are practitioners to complement what the professors would be doing in the classroom. You also get the people who actually done it themselves. So that's really the thrust of this week. And why so many of us show up over here is because we get to learn as well. Because occasionally you feel very embarrassed sitting in someone's lecture somewhere. But here we are all together. So we are all sitting, learning from each other, sharing experiences. It's a fun weekend. So we think of it like the Woodstock week or the Omaha week in Berkshire to try and get people here.
Manish, I was looking at your presentation as well, which you are going to present to the participants here. It's a comprehensive presentation across India, globe, interest rates, everything. I'll ask you about all this, but first, a word on the university, what you're going to share with the participants, and what have you learned in these many years from Nimesh bhai, from Dogesh bhai, and participants have come here.
So you asked me a number of questions in that. So starting with, of course, the founders of Enam, I think at the very heart, when you think of it, are really spiritual and how do I describe as good human beings?
Give back to the society.
It's good human beings.
Correct.
And whenever you go to any company, the first thing we like to assess is, apart from the business potential and so on, what gives longevity to somebody in a business or in a family is really the culture. And the culture of Enam, as we defined it, was people who are always learning, always humble, always respectful of nature, always wanting to share what we have. And that's why the partnership has lasted so many years. Even I would say after the core business was sold, after that the partners are sticking together. And it's really a family. So that says something about who we are and who we like to be. And Flame in that same vein, if you think of life being divided into the four phases of life as is described in our scriptures, is that you have your student period, brahmacharya ashram, then you have your grahastha ashram when you're a householder earning money, then you have vanprastha when you are giving back. And Flame really is Nimesh bhai's give back to society, which has helped all of us to create much more than what we had imagined when we started our career. And then, of course, the last phase is sannyas ashram, when we can go away and no one bothers and cares, and we can just be completely immersed inside.
I'm sure you're around for another 50 years before you take that plunge. You've seen so many bust and bull cycles. Where we are right now and what next for Indian markets?
So new highs always are exciting, and they're always scary. Because you're now in uncharted territory, you don't know where you're heading. And because we haven't had earnings coming through, you always have that gnawing feeling in the pit of your stomach that, is this real? Will the earnings come through? If it doesn't come, what happens? But when you look at underlying trend lines, I don't think, for example, the macro conditions for India have been better. For 25 years, I remember looking at India, you always made a bull case on micro, that the businesses are doing well. And the bear case always was, we have a twin balance sheet problem, the current account is screwed, the fiscal deficit is screwed. And now, of course, you have this whole NPA, so corporate balance sheets are, there's always some macro uncertainty. And yet there is always renewal in the market. New people come out. And therefore, just because the whole index is at a new high is not a reason to say this is the end.
Okay.
And in every market cycle, you will find at some level the market goes ahead anticipating earnings. If it doesn't come, of course, you will get a correction. And I'm not for a moment implying that this market doesn't, have a correction possibility already built in over there. And juxtapose that with the fact that money is just unprecedentedly cheap in the world.
Okay.
So if you're running $13-14 trillion of negative interest rates in global bond markets, I honestly don't know what is the true measure of valuation.
Okay.
Because historically, I would have said if the market is at a 20, 22 time earning multiple, it's implying a 4%, 5% return on that basis. But is 4 and 5% the right metric in a world where money is available at 2-3%? And therefore, while I'm not suggesting again this is the right valuation, but it by no means is a top of valuation in a world where cost of money is so cheap.
So given that there is so much of easy liquidity in the world, everybody is printing money for the last many years. We don't know how this is going to unfold. But with your experience, if US has to hike rates, if there is an interest rate up curve, how this will unfold for emerging markets and for India?
So historically, see, if US is really the force of gravity which sets interest rates across the world. My sense though is the US is in such a corner, as is the whole developed world, that the demographics are not in their favor. There is really the corporate balance sheets, the banking balance sheets are not yet solved. And the entire debt crisis of 2007 is now sitting on government balance sheets. So if you have to unwind the $13 trillion, $14 trillion which they have printed, people who bought it in the last 5 years were the central banks. Who is the buyer when they unwind? So it's easy to say we will hike rates. And they now have to start selling these bonds down back into the market and eventually extinguish from their balance sheet. The Fed balance sheet is 99:1 leveraged or even more. How do you unwind that? It's something new which has happened in the world. When it unwinds, it will be something new in the world. It's very scary to think of the consequences when you have to sell 13 trillion of stock into the market. How will that get absorbed? What the consequences of that is really alarming. And typically people sell emerging markets first and ask questions later.
Correct.
The corollary to that is India is now seen as probably one of the last big growth markets of the world where there is unit volume growth. And domestic liquidity, in fact, this time has been driving much more than global liquidity. Because as a domestic investor, when rates are falling so fast in India while they're going up in the rest of the world, they will converge. Where do you put your money? If you put it in a bank fixed deposit, you don't make anything. You put it in real estate, you're losing money right now. You put it in gold, it's been going nowhere. So on balance, people have felt that at least the businesses are growing, there is value creation happening there. Let's start allocating some capital there. And again, on balance, I think we are getting what, 8,000-9,000 crores a month, which is, if you take it at a run rate of the whole year, it's a 1 lakh crores. So it's a $15 billion number on $500 billion of savings. So it's still a 3% kind of saving number coming in. So it's by no means the sort of end of money coming into equities in India.
Manish, every time when we talk to a lot of market experts, this time they say, the domestic liquidity this time is different. It's very scary when people say about this time it's different.
Whenever you hear that phrase, you should be scared.
Given that this time there is a lot of money coming through SIP and coming through mutual funds and not direct investments, does that give you a comfort that this liquidity is going to stay for a longer period?
I don't think, if you had asked me 2 years ago, I would have told you 9,000 crores will come every month. Okay. So I don't think I'm the person who can, I don't think I can predict liquidity. We play, like to use a cricket parlance, you play according to the pitch. Okay. Right now the pitch looks like the ball is coming, you can drive on the front foot. Okay. Right now there are no grey clouds in the skies, as it were, to suggest some big macro dislocation in the world. For sure there is worries about earnings not yet coming through. There are still worries about people not yet starting the investment cycle. Having said that, the previous worries of the NPA cycle coming to an end and no fresh NPAs being created over the last 2-3 years suggest that the recovery path is on. The investment cycle, at least from the government side on roads and ports and railways and all of that, is really afoot. You do have a lot of banks having moved into consumer lending, consumer finance, and as the economy stabilizes, you start getting a more consumption fillip. And this whole GST and demonetization, creating this shift to organized sector, cleaner players, is suggestive of actually much better times ahead.
Okay.
Now, whether earning growth will be as the market, I think this year people have built in estimates of 14% kind of earning growth. The following year, it's built at 19 or 20.
We've not delivered more than 10%
as
for the last
events
4 years
unfold,
now.
we'll see.
Correct.
So the market at the end of the day is a discounting machine. If the earnings will not come, we'll get a correction.